All right, what's up? Today I want to talk about this indicator, the heat map trailing stop with breakouts by Zeiierman. Sorry if I'm mispronouncing that. It's this indicator here, heat map trailing stop with breakouts by Zeiierman. And in fact, I've been messing with this a little bit. So let's put that off of there and add a fresh one with all the default settings. And let's talk about it for a minute. So what this does is it looks at the way the chart is moving, and then it tries to add a trailing stop loss line that you can use to know when to get out. So let me show you what I mean. Let's say you catch this move up. Let me zoom in a little bit on it. So if you're able to get into one of these moves and you want to know when to get out, that's kind of the point of this. So it trails as the chart goes up, this trails it, and then sometimes it dips into this green channel and then keeps going, dips in, keeps going. But when it finally breaks through, that's the indication that the move has ended. And so the idea here is that your trailing stop would be this last line, the fourth line. And then these first three lines are Fibonacci numbers based on, I don't know if it's based on this starting point. I'm not sure how this one works for calculations, but that's the basic idea. You've got your three Fibonacci lines, your 61, your 78, and your 88, and then your trailing stop is the very last line. It also has all of these signals. I don't like those. I like to try and figure out my own signals for entries and exits. So I'm going to hide all that stuff and just stick with the trailing stop for now. So let's say that this happens, this move happens up, and then it's coming down, and it enters this channel. Maybe you could use that as an entry point, and then you put your trailing stop on this bottom line, and you just kind of follow this thing up, and you get out up here somewhere. This is obviously a good example. There's bad examples as well. Here's a bad example where it comes back up into the red, and you go short, and then you just immediately lose, and you take a loss. So developing an actual strategy around this, you have to kind of figure out what you want to do. Another thing you could look at is you could find a big move and say, let's look at this one because it's a really obvious example. Maybe you catch this move and you want to get out closer up here. You don't want to wait till it comes all the way down here, because if you got in like right here, you're missing most of the move. So there's ways that you can change the settings to make this trailing stop hug the graph a little closer. So it's got this multiplier on it. Instead of 5, if you do like 3, for instance, you'll see that all of these trailing stops hug the graph a little closer once it recalculates here. So you could do something like that if that serves your needs a little better. I'm going to keep it at 5. I'm going to keep all the default settings. This is on platinum futures. So this is the indicator that I was looking at. I have the free plan right now on TradingView, so I only have 4 weeks of data on the 5-minute candles. So I was only able to backtest this for 4 weeks, but I found a strategy that it caught my eye, and so I backtested it, and it works. So I want to share that with you guys. So here's the basic idea. A lot of times, with all the default settings set up, what you'll see is that it goes from green to red, and then it goes into this red area. This is like a consolidation, right? You get this move down, and then it consolidates up into these Fibonacci numbers, and then it continues. And then it consolidates up into these Fibonacci numbers, and then it continues. And then it consolidates up into these Fibonacci numbers, and then it breaks through and starts going the other way instead. Now this consolidation doesn't quite get into the Fibonacci numbers, and it doesn't keep going afterwards either. So I found a good example of what I'm talking about, and then there's bad examples of what I'm talking about, where you get this move up, and then by the time it consolidates, it kind of is over, and you would hit your stop loss and you'd be out. So the trick to any of these indicators is finding a strategy that works. So the strategy I found works for the last 4 weeks. Let me show it to you. Here's the basic idea for entries and exits. It's based around everything we just said, where once this thing turns red, and I should say just we're back testing, so we're not seeing this happen live, but I'm 99% positive that if you were watching this live, it's not until the second candle closes that you would get this color. So when this red candle closes, that's when this red channel appears and we know that we're red. So we have to wait for 2 full candles to close, and then on the 3rd candle or after, we can start looking for entries. Okay, so up here, for instance, we're red. This candle closes and it's not red anymore. This candle closes, now it's green. So on the 3rd candle or after, we can start looking for entries and exits. Okay, so here's the strategy I found. So starting on the 3rd candle or after, you wait for it to come up and touch this zone. You're not waiting for anything to close. It's just if a wick enters this zone, you get in. So let's zoom in on this and see if this 3rd candle is even touching. So I'm checking to see if this wick touches. And in this case, the answer is no. So our entry would actually happen on this candle because it touches this zone. And the basic theory behind this strategy is that it's going to consolidate up into the zone and then continue. And then at some point it'll stop and it'll break through. So we're going to try and catch both sides of the move. We're going to try and catch from the consolidation, we're going to try and catch the continuation, and then we're going to try and reverse the trade here and catch the move all the way back up through the stop loss. So sometimes it works, sometimes it doesn't, but overall throughout the month it worked really well. So we would enter as a short position here. So this is red, so we would go short when this touches this line. So if you look on the right, you can see the number. This line is at 1319.1, so we go short at 1319.1. And our stop loss is this top line. And the idea is we're going to try and catch a 5-point move this way, which doesn't happen here. So this is going to be a loser, and that's fine. We're going to try and catch a 5-point move this way and then reverse the trade and catch those 5 points back plus whatever this distance is. And a lot of times this ends up being somewhere in the 3 to 5 point range. So we're going to catch 5 points, 5 points, and then 3, 4, 5 points somewhere in here. So it'll be like a 15-point winner when it wins. And then when it loses, you're looking at a 3 or 4 point loss. So we go short here, and we have an exit point here as a loss, and we have an exit point 5 points down here where we would reverse the trade and then get out up here. So in this case, it just goes up and we lose, and that's fine. I have a spreadsheet I'm going to track all these on. So we go short at 1319.2. We never hit the reversal point. We get out at 1324.2. We lost 5 points. We're going to track all of our gains and our running total in points, and then at the end we can convert that. On the platinum futures, a single point is $50. So this would have been a $250 loss. All right. Our next opportunity happens starting, so this 2nd candle turns it green, and then this 3rd candle touches. So we would go long right here. Our stop loss is here. And we're waiting for a 5-point reversal. So we get in around 1319.1, which is coincidentally the same entry as here, but that doesn't always happen. So we're going to go long at 1319.1. 5 points above that is 1324.1. So up here, we would hit our first profit. We'd get a 5-point profit, and then we would reverse the trade, and we'd go short right here. And instead of a trailing stop loss, now we're dealing with a trailing take profit line. So as this graph goes up, our profits shrink and then eventually actually disappear. So if you look at what happens here, we're getting at 1324.1, which is here. We're going short. And then by the time we get out, we're actually getting out at 1325. So we're going to lose basically a point here. So we'll make 5 points on the long, and then we're going to lose a point on the short, and we end up getting out right here for an overall gain of 3.1. So we went long at 1319.1. This is wrong. That's supposed to be 5 points. So at 1324.1, we go short, and then we exit at 1325 when it crosses through this bottom line. So that total trade, we made 4.1 points. And for now, we're just going to track every single trade as if we caught every single one and see what the running total is for the month. In this case, we lost 5 and then we made 4.1. So overall, we're down 0.9 points. Now, you might be thinking in your head, wait a minute. If we're short at 1324.1, look at this huge drawdown. Look how far it went the wrong direction. Do we have a fail-safe stop loss? Do we have some amount? What if this went 1,000 points the wrong way? It just wipes your entire account out in one move, right? So you probably want a fail-safe stop loss. somewhere. We're going to do all of these as if there wasn't one and then kind of evaluate it at the end. So the highest this goes is 1337.6, which is about 13.5 points above our short entry. So you have to be okay with a 13-point drawdown. You're going to see as we go through. Some of these are like 20, 25-point drawdowns, but they always end up coming back. There's one that we do get out before this happens, but if the exit hadn't happened, it would be like a 40-point drawdown, which is huge. That's so big. So that's $2,000, right? And so somewhere you have to kind of pick your battles and say, okay, if it goes the wrong way too far, I'm just going to get out, and have a fail-safe stop loss somewhere. Now, if you're sized properly, then the amount you're risking on a single trade won't be a ton compared to your overall portfolio. And in that case, you can have your fail-safe at 50 points, 100 points, and that's a lot, right? But it keeps you in for most of these moves where instead of getting out at 1337, you get out at 1325. So you're saving yourself 12 points of loss there if you're willing to stick it out through these bad times. Having said that, if this just keeps going and going and going, eventually you do need a stop loss somewhere that's going to save your bacon. So anyways, let's keep going for a minute. I'm going to show you a few more, and then we'll look at the outcome. So this one, it turns red. We're waiting for an entry. Entry happens right here. We're short at 1327.1. So at 1322.1, which happens, let's see, does this one do it? Yes, it does. Okay, so right here, we reverse. We got a 5-point win, and now we're long with our take profit on this line, and theoretically a fail-safe stop loss somewhere down here. But for now, we're not going to worry about the fail-safe stop loss. So eventually it does come up and hit that line. So we win 5 points here and then probably about 10 points here. And we get out at 1332.7. You can see the number over here, 1332.7. So short at 27, reverse it at 22, and then we exit at 32.6, 32.7, something like that. So it's a 15-point gain, and our running total is 14.6. And then you just continue doing this. You watch, and you wait for it to touch the green. We'll go long, reverse, take profit down here. Now, this is a good example of a caveat. If you look at the way this channel is working, it gets pulled up by the high of the candle. So in hindsight, you could look at this and say, oh yeah, I would get in right here. But it's actually not possible in the moment just because of the way this is working. So if the graph is coming towards a stable channel, that's an okay entry that you can say in your back testing, I would have been able to get in right there. But if the graph is pulling the channel with it, then being able to say I would have got in right here is actually not possible, because look at this candle and this candle. The graph's all the way down here. And so if this candle was small, the graph would the channel would still be down here. The only reason the channel comes up and touches the bottom of this candle is because this candle's so big. So, over these 5 minutes, it comes up here, and you say, oh, I should have got in down here, but it happened 5 minutes ago. You can't go back and get in right there. So your ability to actually get in right here is limited, probably non-existent, because it would have to come up, and you'd see that it's touching, and then it would have to come back down. You'd get in, and then it would go back up, all in the same 5 minutes. Possible, but unlikely that that happens. So I kept track of these as if we could do them. So this would be an entry at 1347 on a long. And in this case, it's a big winner. But this is, the entry is stretched. That's this note I was keeping for myself for these entries that they're not actually feasible to get into. Because the entry is not a normal entry. It's where this channel is being stretched up to meet this candle, and so I wanted to keep track of which ones of those are happening so that I can subtract them out at the end and see what my running total would have been if I hadn't been able to get into these. So this is a good example of that. So the next one would be over here. We have a short entry right here, and of course it doesn't go down to our reversal point. It just comes up and knocks us out, so we take a loss there. This one, take a loss. and so on and so forth. This one, you'd get in here. It doesn't quite knock us out because remember our stop loss is on this line at first, so we're in a short position starting right here. Stop loss is here, so it comes up, it doesn't quite touch it. Let me just zoom that in a little bit. And then it comes down and does hit our first take profit. We reverse and we're going long now. And then we have some kind of drawdown that we have to wait out, and then it comes up and we win. So that's the strategy. Those are the entries and exits. So let's look at the overall results for the month. Starting August 3rd or 4th, somewhere in there is as early as I can see right now on my charts. And today's August 30th for me, so this is the last 4 weeks. The times that it wins, sometimes you win half of the trade and lose the other half, and you get these small wins. But usually what's happening is you're either just immediately tanking and losing right away, in which case you're losing somewhere between 3 and 5 points on a lot of these. Or you win both sides of the trade and you get this 10 to 15 point win, or you win one side of the trade and lose the other side of the trade, and then you get these kind of stranger numbers that aren't as consistent. So there's a lot of wins, a couple of odd wins, a lot of small losses, and the more important column for me is this running total as the month goes on, and it just slowly grows and grows and grows. And it works pretty much throughout the entire 4 weeks from what I can see. So at the end of the month, your total gains would be 191 points. Of course, without these stretched entries, I tried to catch them all, but I missed this one, so that's 14.5. So it's going to be a little bit less. This guy was the one. So without those stretched entries, it's not quite as good. It's like 164 points instead of 191. But still a decent strategy. There's a lot of ways to refine this. And of course on Platinum, $50 for each of these points. Times 50, $8,000 for the month, which is phenomenal. That's on a single contract. Let's look at a couple caveats here. So the max drawdown, I kept track of the big ones, 23, 16, 26. 26. There's a couple of really small ones where we pretty much hit this trade exactly on the head. It's perfect. We get the 5 points, and then it goes the other, it went basically 5.6 points the way we wanted it to. We reverse our trade, and then it goes the other way, and you just cash out with pretty much no heat the entire time, which is awesome. There's a few of those. 28. And then there's one of these that it does exit on time. Let's actually go look at this one. This is August 7th, 21:35. August 7th. And this is a short initially. So let's cruise over here. This is on this huge down. Yeah, this guy right here. So this is where we get in. Let's zoom back in now that I know where I'm at. This is our entry. We go short. It goes 5 points. We get in, and it's going, and we're like, oh, perfect, we nailed it. And then, ooh, it's just a little bit of drawdown here. So we get in at right around 1365.3. So our reversal would be at 1360.3, which actually happens right here, which is great. So our drawdown is tiny. It only goes down to 57.7. So it's like a 2.5 point drawdown. And then it comes and taps us out. Such a good trade. But this is lucky. Like, what if it hadn't come and tapped us out? And then look what it does afterwards. It just tanks. And after our reversal, we're long. And so this would be bad. This is a lot of heat. There's another exit here, which is great. But if that didn't happen, then it continues to drop. And your maximum drawdown here would be like a 40-point drawdown, which is huge, right? So that trade, the actual drawdown was like 3 or 2.5 points or something. Oh, wait, I don't think that was the right one. Where was this? Right here. But without those lucky exits, it would be like 40 points. And of course, who knows what's going to happen in the future. So this same setup kind of could happen, but without these exits, and you could have a 40-point drawdown. So back to the fail-safe stop loss. You do kind of want to have one in place. On your initial entry, you do have one, right? Your initial entry is right here. You're going short, and you have a take profit at 5 points and a stop loss that trails this trailing stop loss. So the first half of the trade is protected on both ends, but the second half of the trade is not, at least the way that I have set this up, to where you switch and you're going long, and you have a take profit line but no stop loss. And so this could just go, 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 go. So, maybe put one in place, worth thinking about. Another thing to look at is the time of day these are happening. I tried to keep track of, at least on some of them, at least some of the winners. I didn't keep track of that one. Somewhere down here I started keeping track of all the winners. So I'm in UTC -6. So your own time zone is going to be a little bit different. Midnight for me might be 2 a.m. for you. But this is, basically midnight, 12:40 in the morning, 2 in the morning, 10 a.m., 9 p.m. And a lot of these are not in the regular trading hours, which I found interesting. The amount of these nice ones that happen during regular trading hours is actually kind of sparse. This is a good one, but a lot of these are happening either late at night or early morning. So that's maybe a limitation to this strategy. We do have some happening in regular trading hours, but a lot of these are between like 9 p.m. and 2 or 3 a.m., which is interesting. And some of these are not even winners. Eventually I just kind of started keeping track of all kinds of stuff, or the times of all kinds of trades. But that one's a winner, 5 a.m. That one's a winner, 7 p.m. That one's a winner, 1 p.m. That's regular trading hours. That one's a winner, 10 p.m., 11 p.m. almost. So the time of day is interesting. Your ability to catch all of these obviously is going to be limited. But even if you just caught even a third of these throughout the month, that's going to be 50 points, which is $2,500 for a single contract, which is great. So this is on the 5-minute chart. It's a little bit of a swing trade mentality. You're not closing your position based on time of day. This could kind of go sideways for however long, and you just kind of stay in the trade until it hits one of your entry points or exit points. If you're going to try this out, obviously, please do your own back testing before you put any real money on the line. I was only able to back test 4 weeks, so I don't know if this is specific to August, because that's as far back as my chart goes. So look into it, make sure that it is consistent in more than just the last 4 weeks, because the last 4 weeks might not have anything to do with how it normally operates. Also, how it's operated in the past might not be how it operates in the future. So look into it yourself. And then I think the last thing I was going to look at is, I was going to say, this idea of getting in. Let me zoom back in so we can talk about this. When you wait for this entry and you get in, the idea of going 5 points and then reversing. 5 points is just a number I picked out of my head. I just kind of picked one and kept track of the profits, and it worked great. 5 points was awesome. I don't know if it's optimal. I don't know if it works month to month. You maybe want to experiment with different points. 3 points is going to mean you win more often, but your wins are smaller. 10 points means you're going to lose more often, but when you get the wins, they're going to be bigger wins. 10 points also means that you're going to have less drawdown on these huge moves, right? Instead of reversing at 5 points, if you're reversing at 10 points, then you take less heat. Of course, in this example that we looked at, you actually would have hit your stop loss instead if you were doing 10 points. But anyways, the idea is that 5 point number is just one that I kind of made up and tested, but you could test other numbers and see what ones you like. You could play around with moving these lines closer or further from the graph with this multiplier. And then I have never actually put this one into practice myself, so I don't know if I've used this indicator live with real trades, with real money on the line, but it's been a minute since I've used it, and so I can't remember as it's happening if there's little caveats. For example, right now's the market's not open right now, but imagine if these were moving around and then this kind of dips down or up. I'm trying to remember how this works, but I don't know if these lines kind of move real time as, this is a bad example because it's going flat, but like this candle right here. as this candle grows and shrinks, because during the 5 minutes that this candle's active, I think that this, I don't know if, I can't remember if this portion of the channel exists and it's just moving and fluctuating with this candle, or if it just doesn't exist at all until the candle closes. But once the market's open, you can take a peek at that and see how it works. You could also try doing this on other time frames, the 1 minute, the 5 minute. The 5 minutes, the one I was just looking at, but you could look at 1 minute if you want things to happen quicker, or the 15 minute or the hour if you're looking for bigger, like week-long swing trades, that kind of thing. So anyways, that's it. I had a lot of fun looking at it and just spent the last few hours back testing this, and had some good results, so I wanted to make a video. And I hope you enjoyed it. If you have any comments or questions or anything, leave them in the comment section. If you enjoyed the video, please hit the like button. If you're interested in seeing more videos like this from me, go ahead and subscribe, and I'll see you guys in the next one.